What if the August real estate market this year behaved like a normal August? Total available inventory of homes for sale is climbing as the market tries to resume normal seasonal patterns. So let's take a look at what's coming in the market. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and we make this data available to you before it becomes available in the traditional media and data sources. It's now Monday, August 9th, 2021, and here is the data for the week. The median price of single-family homes in the US this week was $394,900. That's down a smidge, $100 from last week. All signs for August pricing are normal. There's no dramatic pullback in buyer demand. We've heard anecdotes from the new construction market where builders are reporting maybe weaker demand, but given the actual data in the resale market pricing, the dark red line here, it's holding up so well that there are no real signs of weakness of any kind, except normal seasonal changes. So my suspicion is that the comments coming of demand weakness coming out of the builders are really shaded by relative comparisons to the insanity of the first quarter. You can use this number here as a more reliable indicator of future prices of new construction than the quotes, like the anecdotes from the builders themselves. The new construction challenges have been on the supply side, not the demand side. The median price of the new listed cohort this week is at $355,000. That's down 1% from last week. And if you look closely at the lighter line here, the new listings are actually holding up they're holding up fine, like late into the third quarter, even as the start of the school year approaches. And that's normally the time that new listings and home sales start to slow down dramatically for the fall. New listings the prices should stay steady for a couple more months before the dip before the holidays. Again, seasonally lighter, but normal seasonality is a good sign. By the way, we have our August webinar coming up this Wednesday, day after tomorrow, August 11th at 10 a.m. Pacific. This is where we look into all the variables and understand whether we've hit the end of the pandemic housing boom or whether we can see it extending into 2022. There is a link to register for that webinar in the description below. Anyone can join. If you are a realtor or a broker, please invite your colleagues and friends, because this is such a critical time to make sure home buyers are properly informed. The headlines are starting to get contradictory, and so you want to be on top of the data all the way through. Again, link to register for the August webinar is in the description below the video here, and click on that so you can join us this week. On the supply side of the equation, total active inventory of unsold single-family homes is up 1% again this week to 412,000. Weekly growth is still pretty robust, actually, for this time of year, indicating good transaction volume, the market trying to get back to normal. If this season proves to be precisely normal, then next week should be our peak inventory for the year at 416,000 homes or so. I wouldn't be surprised if inventory kept climbing till the end of August, but given we've had extended season all year this year, and so you could see it extending a little further this year. We will keep our eyes closely on this number for the next few weeks. If there's any surprising change in this year's patterns, we'll see it here. So, for example, if more unexpected supply hits the market, we'll see it here. Or if there's a sudden drop in demand, we'll see it here. Demand is still super hot. Our immediate sales number is still at 22% of all the new listings, or 22,500 this week, getting listed, taking offers, and going into contract essentially immediately. You can see the total number here at 110,000 new listings this week. It's ticking slightly lower each week, as you'd expect the end of summer. When demand weakens, though, Again, this is the place we'll see it in fewer immediate sales. If a home stays on the market for more than a few days, then it's no longer an immediate sales. And so as demand weakens, we'll see it here. Not yet seeing any indication of that move. The other insightful indicator that we like for organic levels of demand is the percentage of homes taking price reductions. So percent of homes on the market that have taken a price cut recently. Price reductions are climbing very steadily this year, as they always do this time of year. Normally about a third, 30 or 35% of homes take a price cut before they sell. When demand picks up, as it did late last summer, unusually, then this percentage drops. So a third of homes think they're overpriced, but only 25% have to take a price cut because they get offers, multiple offers, they sell quickly. So when I talk about relative levels of demand, you can see how the market is definitely cooler than it was in March. There's more price reductions now than it was in March. But March was so strong at only 15% price reductions that this is the important perspective to keep. Buyers are still excited to gobble up everything available. If you overprice your house, of course, you only have so much room, even in a hot market. So you can't overprice too far. This week, 24.7% of homes have had a price cut. That's way below normal for this time of year. As you can see, all the other seasonal packs peaks during the year, 35% most years. And so we have until mid-November when price reductions hit their peak. So that'll keep climbing. It's pretty steep right now as the market's normalizing. It'll keep climbing, probably in the upper 20s at that time of year. So for homes that miss this summer window, then they're going to have to cut prices this fall before they finally move. So that's why that's going to keep climbing. Okay, that's all the data we have for this week. Inventory is climbing and transaction volume remains strong. No sign yet of any distressed inventory hitting the market from the end of the forbearance process. There's nothing unexpected for demand declining either. But in the next few weeks, we should see peak inventory and then a normal decline through the end of the year as fewer homes are on the market over the holidays. Across the country, if you're selling a house, it's a really good time still. And the question is that window of the perfect market finally closing? That's the topic of the webinar Wednesday. Click on the link in the description below to register for that webinar so you don't miss the full hour of market details. Like, is this going to extend into 2022? What's it going to look like? So see you Wednesday and more next week. Thank you.